atmosphere, but knowing the products and what they offer and why they're good and why they're better. And I mean, if you want to sell anything in life, you should know why it's better, right, Deepak?
We
That's
got
true, Mac.
Who
we
has the
got
best
we
investments?
got we got Prince, I think, is up for
Yeah.
that.
Oh, Princess first. I thought Shonda was going to do an example first. I don't know.
Doesn't matter to me.
I may vote
Um,
without co-host.
Yeah,
but
I think Shanos will do an example, and then I guess we go through Hector. You and I will.
okay, I
Yeah,
can go first.
yeah.
So good morning, everybody. It's just, as you go out there and you actually, so one of the things that we all get to do is we get to go help families, right? And
Right.
as you go help families, what you'll realize is that lots of people just do not have the right products. They
Yeah.
just don't have them. They don't know about them. They think they're good. I mean, if you think back to your own personal story, many of us were in that same boat, right? Where we had products and we thought that they were amazing until someone sat down with us and showed us that they may not have been what we thought that they were, right? And sometimes when we encounter people who have term, we freeze up like, oh, they already have term. Well, let me tell you something. That's one of the best situations to be in. You know why? Because they already believe in term.
That's
Mm.
right.
Now, you have to make sure they're investing the difference so that they have that idea of when their term is up, they'll now have money, right? But a lot of times, none of the time is their term equal to our term.
Mm.
Mhm.
Two completely different products. We get to talk about today what Prince and Hector will be going over is why is our term better than our competitors or our opposition rather, because they only sell term for two reasons. The first reason is the person asked for it.
Yeah.
Okay. The person had to say, come to them and say, I want a term policy.
Right.
Nobody's selling term without people saying, I want it. Or
That
the
part's
second
important.
reason is that they offered it because the person could not, they didn't have a lot of money
Mhm.
Mhm.
in order to get their program started, but they made sure that the person was either going to have a really short term so
Mhm.
that at the end they could convert them over to a permanent product like a whole life, a universal life, or one of those sort of products. Or before the term is up, they're constantly in touch with them to try to get them to purchase a different product, right?
Mhm.
So I get to share with you just an example, or I have two brief examples of clients that I've sat down with that have had term.
Yeah.
And for some people, they'll be like, oh, well, that sounds good and everything, but I have term already.
Mm.
So what do we do when someone already has a term policy? You're looking at it and you're like, well, we can't beat their rates. Because the reality is that life insurance costs are based upon a few things. The first thing is going to be a person's age. Now, you think about it. If someone started this policy 6 or 7 years ago, and now you're talking to them and you're trying to get them to convert their coverage, our program is going to be more expensive. Why? Because they're 7 years older, right? So, when you're doing these comparisons, you have to make sure you're doing the apples to apples comparison. But sometimes our insurance is just more expensive. It's just a reality, right? Because, with cost also usually comes quality, right? So you're getting
Right.
a high quality product when you get to work with us. So here's an example of and I'm not going to go through all of this, just the example. So, all right. So if somebody says they already have term. The theme is you don't want to be afraid, okay, because they already have term. Because one of the biggest things that Prince and Hector will touch on is our renewal rates, right? We beat out the competition just about every time when it comes to what the client will pay after the initial term. Okay. So talk to a 42-year-old female. She had $100,000 in coverage and she was preferred plus. And with her current term, she was had a 30-year term and she was paying about 84.67 a month, right? So what happens after the 30 years? Well, in this plan, the first year they automatically cut her coverage to 250,000.
Wow.
So instead she went from 1 million to 250,000 and it's going to go to $1,251 a month.
Wow.
for
That's crazy.
for the first 5 years. And then after the first 5 years, the cost is going to increase every single year for this $250,000
Automatically.
automatically.
Wow.
Okay. So could you imagine as a person, you having $1 million or something, you paying $85 a month, and then it cuts you to 250,000 and you got paid $1,251 a month?
Cancel that, John.
They're not paying that.
No, they're not paying that. They can't afford to pay that.
Right?
How many people can afford to pay $1,300 a month for their $250,000 life insurance policy?
Mm-mm.
Maybe if you're gonna die next year.
Not happening.
And she's going to be 72. So the chances of her qualifying for additional coverage outside of that plan at that
Slim.
time could be slim, right?
Mm.
So our proposed plan was that she get $1 million in coverage, preferred plus, 30-year term, same thing. And ours is about the same cost. But
It's
here's
not.
the difference: what happens after 30 years. Now, we don't automatically decrease your coverage. You would have to choose to do that. But there's an option if you want to. So now it's not automatic. There's an option if you want to decrease your coverage to 250,000. And if she does so, it's only $415 a month.
That part.
So it's a difference of $836 a month
Mm.
if she needs to keep her coverage after the age of 72, which in some people's cases is definitely going to be something they need to continue with. Okay. So I won't take up much of the time. I have another example, but I'll leave it to Hector and Prince to go ahead and continue with why our term is better than the competition's.
Awesome. So you
Right.
can put a wrapper on it at the end, Shonda, once we go over what we're going to go over. If you have that other example, it would be awesome.
Okay, awesome.
All right, let me share my screen, and we're going to continue on the track here.
Morning, everybody.
Morning, morning.
Good morning.
Morning.
Great job, Shonda.
All right. So, I'll get started. We'll kind of tag team. And then we're gonna also point you guys to a couple of resources that we found yesterday online.
Yep.
Because Primerica has so much material.
So much, man.
They're
So much.
changing up the website. They're making it better and stuff. So we were like planning for this, and I was like, "Whoa! I had no idea, Prince, that they had this, they had that,
Mhm.
this, that, and the other." And it's like, and we've been here for a while, but even us, right, who've been here for a while, like
Yeah.
there's changes that if you're not looking at the website and looking at all the tools, you're not even aware. So one of the things we're going to do is we're going to show you where you can find some of these resources and tools. But the first thing I want to let you guys know is that you're part of a great company, right?
Yeah.
You need to know that.
Yep.
And we do what's right 100% of the time. Um, Even starting with the rating, right? We're rated A plus superior on AM Best. If you don't know who AM Best is or what AM Best is, they're a rating company. They rate insurance companies, and we're consistently at the top of the rating with them. We have about 5.7 million people that have insurance with us, and this is a big one. And when I meet with people, I talk to them about this one a lot because I've heard some stories where somebody will put a claim in, Deepak, and it's 3 months, 4 months later, and they're
Mhm.
still waiting for that company to pay them out.
Yeah.
And
That's
one of the things that I can really like be proud about is, 91% of the claims that go in, they get paid within 14 days. I mean, when somebody passes away, it's a very stressful time. And imagine not only you going through all that stress, but you're having to wait, 2, 3, 4 months for an insurance company to pay out the benefit.
Yep.
I've had clients where the person will pass away, and people will ask you this. They'll be like, what happens with the funeral costs? Well, Primerica, what they'll do is they'll actually, this is kind of a side note,
Mhm.
you know, you let the funeral company know that you have insurance. Primerica will send directly the check to the funeral house. So that person is not sitting in a refrigerator for 2, 3, or 4 weeks waiting for the money. Because here everything is about,
Money. Yeah.
would you agree? If you don't have the money, they're not gonna. They're not going to bury you.
Hmm.
Okay. 91% of our claims get paid within 14 days. Almost, and this could be updated. Probably we have over a bill. It says 903 billion of term insurance in force. It's probably more than that now. And on average, we have about 6.1 million in benefits claims paid each and every day. I remember it used to be like not too long ago, it used to be like $2 million a day, man. And now it's over like $6 million a day on average. So do we pay out? We absolutely pay out. So one thing you can feel very secure and very sure about is that we, you know, we come through when we say we're going to come through. Okay. Prince is going to cover the IBR. What is an IBR?
Yep. IBR is one of the amazing things, features of our products, we offer to every client. They can deny or they can accept it during the application process, right? IBR obviously stands for Automatic Increased Benefit Rider. So think about it, right? A lot of times when we sit down with clients, right, when we do the needs analysis, they need a certain amount of coverage to cover their income. But a lot of times, due to all the expenses, they're not able to afford, right, a certain amount of coverage, right? So what we can do is we can give them, less than what they need, but then turn on the IBR, meaning that every year the face amount will increase by 10%, right? So obviously that the thinking is, okay, normally people get raises at their jobs every year, right? Or cost of living increase every year. So the idea is, okay, every year your policy will increase up to 10% of the face amount, and then your cost will also increase, right? So you cannot get what you need right now. We can give it to you, but then eventually, because of the IBR, eventually you'll be able to get up to what you need, right? So that's to me is one of the most amazing things that we offer for our clients, and that's a huge deal, right? Because they know what they need, but at the moment they can't cover it because of cost, but we can still insure them with as much as possible, knowing that there's an option to increase the coverage every year without having to go through medical check. That's a key thing, right? All these insurance companies, if you want to increase your coverage, you have to go through medical check because they don't know what has happened to you within that past year. But here, we give you that 10% increase without having to go through that medical check, which is a huge, huge, huge benefit.
Yeah. I actually have two stories on that. I had the very first claim that I paid out when I met with them years and years ago. I think at that time they had like $500,000 in coverage at that time, and every year they had an option of increasing the coverage. And then unfortunately, this gentleman he had an accident. He was a roofer. He fell from like the second, like a two-story or three-story building, and he passed away. He was like 42 or 43 at the time. And then by the time he passed away, because of the IBR, the coverage was up to $644,000. So the
Amazing.
family got a payout of $644,000. She was able to buy a house. She was able to pay off debts that they had. She was able to, their youngest now just turned 18. I opened up an investment account for the 18-year-old, which was exciting. And he has his college pretty much paid for, right? Because of the fact that they had this, because they had the IBR option. I had another client who qualified for coverage, and 6 months in, he got diagnosed with throat cancer. Imagine you have throat cancer, and you're like, man, I only got $150,000 because that's what I could afford.
Yeah.
But now he has
Yeah.
the option of doubling that coverage because with the IBR, you can increase
Yep.
it for every year, 10%
Yep.
up to 10 years. So you can double the coverage at the age that you were when you got the coverage. So that
And also, Hector, at the rate that they gave it to you, right? Whether it's preferred.
at that rate. Yeah. Yeah. So those are two examples. So amazing, amazing. Now they also have this thing called the automatic increase request.
Yep.
And so, some people are healthier than other people. So when they go through the underwriting process, they have a couple of different options. Like you can
Yep.
qualify for either, like that example that Shonda gave, was a like preferred
Yep.
rate, right? So let's say that it was a case like that, right, where you may have quoted maybe like $100 a month,
Mm-hmm.
and then after going through underwriting, they were like, "You are super healthy."
Yep.
So what they'll do is one of two things. They will either say, we're going to bump down the premium to 84,
Oh,
or
yep.
in in most cases, what happens, and uh, it's a case by case basis. But what they can do is they can say, okay, that same $100 quote, we're going to give you now 1.2 million,
Mm-hmm.
right? So if they qualify for a better rate, they have those two options. The air option is the automatic increase. Will they'll give them more coverage for the same premium. So that's a little bit about the air.
And that's a choice at the time of application, correct?
Yes, when you do the application, I think at the time of the application, it's the automatic option, unless you select otherwise. So you got to make sure you keep an eye on that. And then the last thing I want to add about that, I heard Steve Madison say this. With all these features and benefits that we're talking about, you got to look at it like, I think he said, imagine you're getting a TV and it's like a really the biggest TV, and it's got the best image quality, but the sound wasn't working. Would you buy that TV?
No,
And why wouldn't you buy that TV?
that's good. No sound.
What good is a TV without sound, right?
Yeah.
So it's like not all term insurances are created equal. Okay. When we're talking about this, these are features and benefits that separate us from
Right.
other policies.
Other companies. Yeah.
Yeah.
Yep. The next feature that our amazing product comes with is the terminal illness benefit, which to me is a super, super amazing feature of our policies, right? Think about it. All of us, have some worry about the future, what could happen, right? Diseases are everywhere. People getting sick, cancer, whatever it is, right? Just imagine you get a cancer diagnosis and you have a certain amount of time to live. Now your family's worried, you scared, you have expenses, you have debts that you have to pay for. You worry, if I pass away, how's my family going to be able to afford all these things? Right? These are all realistic concerns that people have. But what our amazing company did, right, is they added this feature to the policy saying that, hey, if you get a diagnosis and you have 6 months to live, what we are going to do is we are going to allow you to tap into your policy and get up to 40% of whatever your face amount is, up to $250,000. So while you're still alive, guess what? You can get that check to be able to what? Help pay for your medical bills. You can have alternative care. You can go to a different country to find a different care if you need to try to get better. But you have that benefit there. Listen, our own Christian is a perfect example of this, right? Of this feature, right? We all know what he's going through. And guess what? He was able to get access to part of his coverage to alleviate the stress and the burden for his family, to pay for their care, to pay for some debts, to pay for some monthly expenses, right? This is so amazing. And to make it even greater, if you have waiver of premium attached to your policy, you can get up to 40% of your face amount all the way. Up to 70% of your face amount, up to $400,000. To me, that is so amazing, knowing that, hey, I don't have to die for my family to necessarily get this. While I'm alive, if I'm diagnosed with something, I can have access to hopefully get better if possible, right? So it alleviates the stress and the worry for yourself and for your family.
That's right. And that was like eye-opening because Christian said that he had spent $100,000 in 10 weeks down
Yep.
in Arizona,
Yep.
And guess what? Like if you go down to Arizona where he's at, the medical insurance doesn't cover that bill.
Correct.
So imagine having access to a benefit like this where, okay, like
Correct.
if you don't have this, then you can't afford to do those treatments.
Yep.
My brother has a client that he's going through that, and he I think they applied for a terminal illness benefit rider as well. So this is huge. You want to say something, Gordon?
Yeah,
Oh
it's
no, no. Oh, yeah, okay, yeah. Go ahead, Gordon.
well, it's just amazing, talking to Christian and when you talk to other people that have health scares or issues, um, you get to the front of the line when you tell the doctor's office I'm paying.
That's right.
I'm not filing for insurance. I'm going to pay whatever it takes.
That's right.
You find out really quickly that the health industry and doctors are for profit.
Oh,
That's right.
They don't mess around, man. It's like, okay, well, and you tell them at the X-ray office, you tell them at the EKG office, I'm paying out of pocket. It's no big deal. Oh,
Yeah.
we can get you in tomorrow. It's crazy.
Yeah.
Otherwise, the schedule is 2 months out because
you're right.
they know
Correct.
they're
Correct.
filing, they got their whole office filing claims, and it takes months to get money from insurance companies from health insurance, and sometimes they
Correct.
get denied. But you come in with money, doctor gets paid.
That's right.
We know how health insurance companies are about
There's
paying up fast, huh?
I got two thoughts. Christian got $250,000 too, even though the bill was only 100 grand. So for Christian, it may not matter because he's got money.
With that one bill, he's got another 100,000 up in New York. But anyway,
That's right.
But
Yeah.
for a normal person that doesn't have, money to be able to cover that if you needed it, getting the money, maybe you are going to die and you want to go on a vacation and
100%. You could
spend
die.
money, you can do that. And then John Lavin the other day, I was watching a IUL video, and there's a difference between our terminal illness benefit rider and other companies in the sense of we have determined benefits and other companies give you negotiated benefits. So you know what you're getting here automatically. Where
Correct.
companies,
Correct.
they make I don't know what the process is,
And
but
this range of, yeah.
yeah. So I think that's important too.
Negotiate. Okay, awesome. Um, Now we also have this thing called a waiver of premium.
Hmm.
Disability, si- since since money can become an issue while you're disabled, Primerica offers a disability waiver of premium rider. Under this benefit, if the insured is ever continuously, and this is key, totally disabled for 6 months or more, Primerica will waive your policy premiums that are due after your disablement passes the 6 month time frame. So if you're disabled uh, for 6 months, then you don't have to worry about making. I even heard an example of someone that who got a stroke and who was permanently disabled. And from my understanding, the premium was waived uh, like permanently.
Yeah.
I don't know if you guys
Yep.
are
No, that's correct.
aware or know it.
Yeah.
That's
Yeah. Yeah.
Exactly how it works.
Yeah.
yeah.
Exactly how it works. After paying the 6 months, you go into that 7 month, they're going to reimburse you for the 6 months. And then as long as you're disabled, it's covered.
Yep.
You just have to re-show disability every year.
Is that right?
That's what my client has to do.
Correct. Correct. Yeah, you have to re-show it. Correct.
Can you give us a little insight about your client's example, Allison?
Sure. So I had a client, I actually met her. She was at her end of term and she was really frustrated because she had to obviously drop her coverage down, but I was working with her and she in the process, so we like sent in the paperwork and then something happened where I was looking at something. I was like, wait a second, you have waiver of premium. And I knew she was disabled. Like,
Mm.
I mean, she had been disabled for a while. She had like a nerve damage and so forth. And I was like, did you know that? She's like, no. So first thing we did, we converted it back to what her original coverage was, even though we had already decreased it down. And then we applied for the waiver of premium and kicked in, right? So you have to show you're disabled through like doctor notes and whatever. And then so every year she gets a letter just saying like the doctor like needs to resubmit like that she's still disabled. She'll be disabled forever. So because she was at end of term, right? Her premium had gone from what it was and it jumped significantly. So they're waiving that forever. But her term is term to age, I think it's 90, I think was hers. I'm not sure that 85 or 90. So as long as she's disabled, they'll waive it for as long as whatever your term is. So whatever the policy says, right? If it says to age 100 or age 90 or age 80, that's how long they're going to waive it as long as they're disabled.
Awesome.
Wow.
Yeah, we have so many examples on the team, right? Of these benefits like that people have used.
Yeah. Yep. Yep. The child rider. Another amazing thing that we can do for our clients. And what I love about this is, for example, if you're doing an application, right? The client has a young child, right? That's a new baby as early as 5 days, right? And they have other children, let's just say six more children. So total is seven children, right? And let's say the client chooses to get the rider. And let's just say they want 50,000, right? That's the max you can get on a rider. And it costs them, let's say, $10 or $15 additional per month. That $15 per month additional is not per child, it's for all the children to be covered for that 50,000 each for that same coverage. You're paying one for six children. To me, that's amazing. I don't know any other company that does that. You might ask, okay, well, what's the benefit of putting coverage on the children? Well, think about it. Nobody knows. Just like adults can pass away, children can pass away, right? God forbid your child pass away. You have that coverage to be able to what? Help to be able to pay for the funeral costs and other costs, right? This a God willing the child don't pass away and the child goes all the way up to age 25. Guess what? And let's just say the child has some type of illness and they cannot get coverage anywhere else. Because they had a rider on them, they could convert that 50,000 to five times what? More, up to what? 125,000 per child without having to go through what? Medical check because they had the rider on there, right? So to me, it's an amazing way for the parent to cover the child when they are going through, right, from age 5 up until, 5 days up until 18 years old. And then when the child gets to 25, they can then convert and get their own policy for five times of the amount, right? In case they can't get it from anywhere else. So to me, it's an amazing opportunity for us to be able to what? Educate our client on how these things work. I have it on my policy, right? And every client that I sit down with, I explain it to them. They say, oh man, this is a no-brainer. It's all through understanding and how that works, right? So I think you want to add anything else to that?
Yeah, like when you sit down with clients that have insurance, like one of the big things that you'll see is that these insurance companies, what they'll do is like if I have three kids,
You'll
they'll
get them
do a
all separate.
policy on me,
Yep.
they'll do a policy on my wife,
Yep.
and they'll do a policy on each one of
Each,
the kids,
yeah.
right? So that's like a separate premium for kid one, two, three, and so on, right? And here
Yep.
they're all covered under the same premium.
Correct.
Okay, so it's
It's a big deal, man.
the cost savings thing, right?
I
So
think it's also important to mention the paid up part. I had a client where the paid up, if the insured dies, right? So I have my son, he's my child rider, right? I'm the payer on the policy. If I pass away, then his policy, there's nobody to pay it anymore. Well,
Correct.
with Primerica, it becomes a paid up term policy on the child until the child reaches the age of 25, where they can then convert into their own policy.
That's
So
a,
it
that's a key point.
allows it continues their coverage even though the breadwinner parent passed away. Yeah.
and then what Prince said, right? Like I had a client where he got cancer when he was 11 years old.
Mhm.
So that kid was not going to qualify most likely
Correct.
for a standard rate once they became an adult. But the fact that they had the coverage as a child can convert the coverage to their own policy five times whatever they were covered for
Correct.
without going through underwriting, even though they had cancer in their childhood. So it's a big deal. I mean, these
Really
are,
powerful, man. Yeah.
and then this is what we kind of started with, right? The renewability options. There's a couple of different renewability options that you have. Like, so obviously we're talking about you have a 10-year term, 15-year term, 20-year term. So you get to the end of the term, and now it's time to renew. You got to make sure that you're investing the difference on the side, right? So that ideally, once your client gets to the end of the term, they wouldn't need insurance at that point because now they're self-insured and they have money saved. But if they still need money, you saw Shonda showed in her example, right? With the other company, like the renewal rate was ridiculously expensive. With us, it was way less. So the rates are very competitive. So you can keep the policy and your premiums will increase every 5 years to age 70, and they will then increase annually to 95. That's one option. You can continue what they currently have. Or you can switch it to something called an annual renewable term, where you'll keep the same coverage, and then it'll renew every year, and it'll go up every year. Or you can choose to have something called a decreasing term, where you'll keep the same premium, but then your coverage goes down, and that's set all the way to age 100. And then the other one is the custom exchange. I think this is the more popular one, but I think to
Hmm.
take advantage of this one, they have to be under the age of 70, if I'm not mistaken.
That's correct.
Yes.
Yeah, so if you got coverage when you were 30, and then now you're like, 65, and you wanted to continue it, you can have a 10-year period, so 65 to 75. Um, and then so the premiums are level. So I think that's probably one of the more popular options. I don't know if anyone wants to add anything from examples that they've had with other clients.
Yes, I've been through several of these, but
Okay.
including my own. Um, so yeah, if you're before 70, exactly what you just said. If you're after 70, it's going to become an annual renewable term. So
Or you can do decreasing term.
You do DT 100 too.
it's
The two
it's
options you have.
I'm finished.
Okay, gotcha. So next time I'll have like a little chart on there. Um, all right, go ahead, Prince.
Yep. Some of the other, man, the list goes on and on and on, right? The no war exclusion, the no war or terror clause. Now think about it. We all know we are living in uncertain times, right? Countries are at war. There's so much confusion in the world, right? Nobody knows what tomorrow's going to bring. We saw what happened in 9/11, right? When a company had this war exclusion, a war and terror exclusion in their policy, what this means to you is, for example, if you pass away by an act of war, for example, 9/11, the insurance company reserves the right not to pay your coverage amount. But guess what? Primary said, no, 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 no. We don't want no such clause in our policies. No matter how you pass away, as long as you got that policy, everything went well. If you pass, no matter how you pass away, we're going to pay your death benefit. 9/11, and it is well known. During 9/11, Primerica paid all their policies, and a lot of insurance companies deny their clients payout because of this what war exclusion and terror exclusion clause in their policies. It's a huge, especially in these uncertain times, right? The next additional benefit is the banded coverage. For me, it's kind of like shopping at Walmart compared to shopping at Costco, right? You can get bigger for less in a way, right? So that's kind of how the bandit thing works. Is the more coverage you are getting, the less it's costing you, right, per thousand, right? So it's kind of like getting a discount for more coverage. So if I know this, right, that if my client wants to say, "Oh, I only need, let's just say, 130,000 per coverage," but I know that if they go up to 149,000, 150,000, they're going to be able to get a less cost for more coverage. Why would I explain that to them, right? If the client says, "Oh, I only need 220,000," well, I know if I can get them to 250, they're going to be able to pay less for more coverage, right? So to me, banding is another amazing way to be able to give more value to our clients. And I explain this to all my clients whenever they get coverages of how banding work because it makes a difference.
Yeah.
And and the reality is that the system, the computer will hint to you. So if you're
Yes,
doing and you're out there, it'll actually coach you on moving it up because you may not remember about the banding and everything.
correct.
The computer will assist you. So it's really good.
Yep. Thank you, Ellis.
Yeah. Keep in mind like 150,000, 250, 500,000, and
Yep.
750. These are the ones that trigger. the banding.
The bandit, yeah.
Yeah. And a point on the war clause, when the terrorist attacks happened, there's a lot of insurance companies that did not want to
Mhm.
pay the benefits. Primerica didn't even bat an eye or blink. They paid out like quickly. We had people that passed away not only in the buildings but also on the planes. Um,
And what made that so important is that for a death claim to be filed, you need
mm,
to have a death certificate.
Correct.
And our people decided to pay it because they knew the person's in it, but they didn't have any idea. They never would have found a death certificate because there were
And
no remains.
Nobody.
they have in home office, they have the names of the people for 9/11.
Yeah, I remember when I toured the office. Was that MIT that you went, and then they took you to the office?
Yeah, yeah.
Yeah.
Big deal, man. Yeah.
Yeah, and I think also what's important about that is it's also it's acts of war, but also acts of terror. So like
Yeah.
if you look at like for example in Vegas when there was that mass shooting in Vegas, the Vegas officials purposely didn't call it an act of terror because they didn't want companies to have an excuse. But Primerica
Mm.
in that particular situation literally got the list of people that passed away in Vegas and called the agents to say, hey, I'm not sure you're aware of this, but you had somebody pass away in this event and they have a benefit, they have a policy with that. So, that what they do in these acts of, when there's mass shootings and so forth, the second that's called terrorism or an act of terror, the other companies have the right to not cover.
Yeah.
And
Yeah.
just to add on, in my former life, I used to handle not life insurance, but I used to work for a big insurance company handling liability claims. And the one thing is that this is written on all policies. You look at your homeowner's policy, your auto policy, it's written everywhere. So when I found out about this is a big thing because I think I just believe we're the only one that does not have this will have this on our policy.
Yeah.
Oh, did we lose Gerald? All right. So then, real quick, because we're running out of time, I'm going to cover this real quick, and then I'm going to point you to some resources. And then if
Yeah.
we have time, we'll bring
I
Shonda
mean, it's
back.
not just 9/11. And people don't realize it until it happens, but it's real. It's a huge benefit to have,
Yeah.
knowing that your company, you're the only company that's going to pay in case something happens. We don't want it to happen, but if it does, your family's secure. And we'll
Yeah,
get,
you froze, Gerald, actually during that time period.
But we second all that. So another thing, we do with term 100% of the time, guys. Like all these other companies, like Shonda said, like they'll only offer term under competitive situations or if your budget is limited. So you can be sure that you're doing the right thing 100% of the time for your people. Custom term insurance. I mean, I wish we had time to get into the details of that, but it's basically a way custom term where you can maximize the coverage for the least cost. You can kind of like like if you have a 30-year mortgage for 250,000, you can give them a $250,000 coverage for 30 years. Maybe they have like student loans that they're going to pay up in 10 years, 100,000. You can add a rider on there for 10 years for that amount. Maybe the kids are going to be going to college and they'll be out of college in 15 years. You can add a 15-year rider. So you can customize it based on their specific situation. And what that does is it maximizes the coverage. And as their obligations go away, once that student loan debt is paid off, they don't need that $100,000 coverage anymore. So then that falls off and your premiums come down with time. That's custom term.
Yeah.
Well, we can go over an example like that another day. And also, guys, the fact that you provide, and that's in the financial needs analysis. So when you go into financial needs analysis and you're at the insurance part, it takes into consideration all the situation from the client. And we already talked about the renewal rates, right? We have some of the best renewal rates in the industry. So what I want to do, because that was a lot. Oh man. The time goes by so fast. I will share with you this one last thing.
Yeah. Please share that. That's amazing.
You want to share that?
No, no, no. Go ahead. This is amazing. You can share that. It's fine.
So there's something called the comparative report, where this is not something that we put together, but this is like a third party that they compare insurance companies in terms of like how solid they are, and they took a look at, this is the solvency is the insurance company for every liability that they have. Like if I have $100,000 insurance coverage, that's a liability that they're gonna have to pay out if I pass away. So how much money do they have on hand to cover those liabilities? If you compare Primerica to the average 20 of the 25 leading insurance companies, we have on average $158 for
Yeah.
every $100 of liability.
Yeah.
So remember back to the first slide where we said that we have about $900 billion in coverage in force. That means they have over, you know, I haven't done the math, but they have more. They have more
Way more.
in asset in the liquid assets. This
Hmm.
this blew me away because we have $155 in money available, liquid cash, for
Yeah.
every $100 of liability. And look at the average in the industry. Look how much they have. They have $47 for every $100 of liability.
This is really major, man. Really, really key.
Yeah. So this came from the independent comparative report. So there's that. There was another one. There's a solvency, right? How much money they have, and here you can see the list of some of the companies out there, and I
We
think we have the highest solvency. Um, so this is, money on hand.
Heck, I actually had a client ask me, well, if I get this policy, like, how confident can I be that they'll pay out? I just put this slide up.
Ah,
Yeah. They said, wow, I didn't know that. Right? I said, yeah, man, I didn't know that. So I had to learn it. So it's really a powerful tool to have, in your toolbox because you will
Tracy,
get asked at some point. So
Tracy, have a question for you
Tracy
guys.
has a question. Yeah.
Yeah, is the solvency issue the reason why the other insurance companies decided not to cover acts of terror and war? Because they would go broke themselves to
That
pay
could
out that
possibly
many
that
people.
that could possibly be it. It kind of reminds me of, they at the banks they have this rule. I forgot what it's called. They don't have to have the deposits of if I have $10,000 in my account, they don't have to have the $10,000 in
correct,
the account to cover if I go. That's why they would be in trouble if everybody made a run on the bank and everybody
correct.
went to the bank and wanted to cash out at the same time. So you wouldn't have that issue because we have more money on hand than what we owe, right? If everybody passed away.
And that makes a
It's
lot of sense
Tracy.
what Tracy said, because
Yeah.
if you had a large, bunch of people killed due to an act of terror,
Mhm.
you would need to be very solvent to be able to pay
Correct.
out all of a sudden a large claim, whereas we did with the World Trade Center. We were one of the first to pay because that's a big multi-claim, uh, time.
Simultaneous.
Yeah.
Yeah, simultaneously, you would have to have, hundreds of millions of dollars potentially.
Yeah.
Well, Tracy, the other and a piece of that is what Art Williams put in place by dealing with the how we distribute, how we communicate, how we don't have advertising. So all those things fit into how we have that much solvency because we're not spending it on these other things.
I see.
So lastly, let me point you to some resources that where you can get a lot more information if you wanted to,
Yeah. That was great.
do your homework.
Can
Yeah.
you share that PowerPoint that you had? Is that a download? Don't.
Yep, I can share that. So if you go to Primerica Online and you go over here to where it says products and then life insurance, can you guys see that?
Yeah.
You go to products and life insurance. Oops, log back in. This will come up, and then they have a whole bunch of stuff. They had a bunch of amazing stuff over here, which in the Life Training Hub. So you click on Life Training Hub, they have a bunch of resources that you can look at. They have videos, mostly videos. I don't know if you guys have seen those, but They have stuff about, and they have a whole bunch of stuff,
That's
right?
great.
So you can go through that, and there's a whole bunch of things that you can learn uh,
Yeah,
about different things.
That's
really,
great.
really, really, really good. Yep.
Yeah.
The ones that were checked green was where you got the resources. Is that right?
Those those no, I had already put that together,
Yeah.
but we when Prince and I were reviewing for today, we
You
clicked on
found
a
all
couple of
this.
things just to see what, and
Yeah.
there's some really good resources there.
That's
When
valuable.
RVP Rick Miller was on the ITLC, he went through the Life Training Hub and he showed us
Mm.
same thing right there. And if you do every one of those quizzes, I asked my team to go through that. Everybody here should go through it and get each one of those and see every piece of it.
Really, really good.
Good stuff. Are we wrapping up?
We are wrapping up, Gordon.
Can I share a couple things?
Yes, sir.
Um, I just want to say, one, I want to just take a minute and congratulate Kristen Rhodes if she's still here. Kristen has got a $450 bonus uh,
Nice.
that's in the system right now. And I think, and that's senior rep promotion and 450. So great job, Kristen, on getting there. That's the first $400 bonus on our team for the
Awesome.
month of August for 1 by 1,000. So they're queuing them up. I know I've heard through Destiny that she wants to get her 3 by 3, and she's working on that, but she's at, I think it was 1 in 1,800. I'd have to go back and look. No, maybe that was Asante. Asante's got a potential to get a bonus, Ellis. He's got 1,800 in production in, but he needs a recruit, and he's got to finish the class in the next 10 days or so. You got to make sure pay attention to finishing the class in the first 60 days because I think Krista needs to go back and look at that to make sure she finished the online course. Because even though in Maryland you don't have to finish the course, but if you want to get the extra bonus, you got to finish the course. So if that makes sense. In Maryland, you can, once you've prepaid, you can go take the exam. You don't have to finish any course. You don't have to go to the weekend course. That was the change. But if you don't finish the course somewhere, the bonus is affecting us, and that's through the home office. If you read the latest Primerica stock, there's a couple articles out there about they've beat expectations in multiple areas of profit. The company's spending more money on technology. We just saw that this morning through Hector and Prince's uh, training, and that was in the report for the shareholders. And lastly, the report for the shareholders was our managed business and our investment business is up, and that's what's a big driver right now. And insurance is down a little bit. And I'll make a comment on the training is um, any other company in the industry, we're the only company in the industry that we're a distribution hub that's owned by a life insurance company. Primerica Life is a life insurance company that owns this distribution hub. Any of these other people that work for our competition, they work for a distribution hub that has no affiliation with a life insurance company. So they market a product that another company would come along and use in their distribution. So what that means is they're more likely to deny claims. They're
Mm.
more likely to mess around with the client. They're more likely to not give a crap about end of term conversions. We do end of term conversions all the time, and it's not always pretty, but we do them and we do them really well. They don't do them well. If you don't like cash value life insurance and you're younger because it's not the appropriate way to protect, you ain't going to want cash value life insurance in your 70s because that's what they're going to do to you. They're going to put you in an index universal life, even if they sold you term, which they don't want to. None of those companies want to. That's another insolvency thing. That's another reason why we're so solvent because we don't sell that crap out there.
Mm.
And so those companies, if they ever told the truth, they'd go out of business. We got a couple in-person events this Tuesday, by the way, not in-person, business overview Zoom. We got some new speakers. You're going to want to pack people out to that. Wednesday in Owings Mills, we have Wine Wealth Wednesday, 6:30 wine, business overview 7 o'clock. You want to come out. End of month, I've been saying it wrong. It's not Monday, September 1st, because that's Labor Day. End of month will be October, excuse me, September 2nd, I'm moving it a whole month. September 2nd, which is Tuesday. So we have a week from Tuesday to close this month out strong. And then September 6th, we're all in person up in the Owings Mills office for our Super Saturday, where we're going to do three different teachers. We're going to kick us off with Marie Acevedo going through best recruiting practices, spend about an hour and a half, really get that down. You're going to be able to be there in person. You don't want to be on Zoom for that. Everybody should arrange to get there Saturday the 6th. I'm going to go through the kitchen table, everything I can bring you, resources, tools, printouts. You'll leave there better. You're not going to just walk out of there and not know anything better. You're going to get some tips. Even if you say, hey, I know F&As, I'm going to give you some better ways and better things than maybe you thought of. And then we're going to wrap it up with Deepak Shah, the best example in the hierarchy for investments and assets under management. And he's going to share with you what he shares with his clients to how to accumulate more assets, because Deepak is the Hercules in our, and at least this part of our company, in the Christian David part, for the investment world. I don't know what he's got in assets under management. How much in assets under management?
126 million.
Nobody on here's got anywhere close to that. 126 million AUM. So what that does is create a quality of life. Why is it he makes 600,000? He ran on a shitload of appointments and he figured out how to explain it. And I promise you, his investment presentation today is better than what it was 30 years ago when he started.
I agree.
And our investment business is so much better. Just a quick share, and Fight Club and attendance is everything in our business. Showing up and getting better, and we're in a competition. Hope you're in a competition. Competition makes everybody better. Tony, we got you by a little bit, so get going. Raina Base Shop. Good job, Team Kai. Team David, it's time to get going, man. Let's not leave that alone. We've doubled you, and we could add Tony and David Base Shop together, and we'd have you. Look at that, 50, 88, 8,900. So, and then the Maurice Acevedo team of steel, who's not here, they got us by a little tiny little margin. So
a child rider.
Yeah, child rider. So Team Kai, let's go down swinging. Let's kick everybody's butt this month, if nothing else. And let's have a good close to the month. We got Tuesday is it. All right, rock and roll. Anything else? Did I miss anything?
I don't think so.
All right. Well,
Yes,
have a great day,
yes,
everybody.
yes,
Have a
yes.
happy
There is one
Saturday.
thing. We need to continue to push for the attendance thing, right? So
Yep.
always remember October 18th. Every meeting we have, we still got to keep that in there all the time. October 18th, you need to continue to go and get your tickets and push for more people coming and just continue to talk about that. It's not going to be bigger unless we make it bigger.
Yeah, there's a good chance we might cross our fingers. Rob and oh my gosh, what's Rob?
Minnie Davis.
Rob and Mindy Davis. Yeah,
Well,
from
good.
South Carolina. I think potentially we got Rob and Mindy Davis from South Carolina. They're one of the best, I think, at building relationships. They did a Zoom for us some time ago. It was fantastic. He's $1 million earner. He's from South Carolina. So, I mean, he's like the king in South Carolina. You're in
That
South
Zoom
Carolina.
was awesome. I remember that.
That Zoom they did for us.
They were great.
They're
He's
phenomenal.
from the Bronx.
Is he really from New York?
He's from the Bronx. He organized out of South Carolina. Now he lives in North Carolina, but he's
I
from
didn't realize that. Okay. Yeah.
You guys a beast.
Great leader in the business. And I think he was a music
teacher. Yep.
music teacher, poor, broke as a joke, teaching music, and was involved in like church ministry and got in our business and just changed his life. So, all right, folks.
I hope they
Great Saturday.
It's great.
Go put some numbers up today.
If you want to